Well, good morning, everyone. I'm David Paul, the Managing Director of VectorVest here in the UK. And clearly, I'm sure you've all read that there's storm clouds ahead for equities. The bond market fell apart last week. And of course, we had major announcements from both sides of the Atlantic on a series of interest rate hikes. And of course, the whole concept of quantitative tightening, i.e. central banks taking money out of the marketplace. And that was emphasized by a Fed governor last week, and that caused the stock market to fall back. So as we go into the trading day today, and you can see on the first chart that the longer term trend of the UK market is up, but the shorter term trend has been down over the last 4 or 5 trading sessions. So our advice this morning going into the market is to be very careful in terms of buying stocks. So short-term trend is down, underlying trend is still up. I'm holding quite a few positions that I bought in the run-up over the last, 3 weeks now. And I'm going to go through them now. Very happy with Bloomsbury. I bought it at support, and as you can see, that's a weekly chart of Bloomsbury since the start of 2020 odd. And as you can see, it's left the February 2020 high well in its wake. And the share has gone sideways for the last, 6 months. And in that sideways pattern, it's been strongly accumulated at support. And if you look carefully, you can see that the up weeks occurred on rising volume and the down weeks occurred on falling volume. And that's a sure sign of accumulation. And sure enough, on very, very good news, the share broke up out of the range, and it's now consolidating on relatively low volume, which is a good sign. So I expect more upside from Bloomsbury. Certainly not going to shoot the lights out, but it's going the right way. Second stock that I'm very, very positive about is Cape Tech. Again, a weekly chart from the start of 2020, and again, the February 2020 high left miles behind. The blue line underneath the price is the forecast earnings per share, which has been rising strongly, and the green thick line study above the price is the VectorVest valuation. So VectorVest finds the stock significantly undervalued, growing earnings strongly, and oh, I don't show it here, safely. To me, it looks as if we've pulled back. As you can see, the weight on the pullbacks over the last 3 weeks now, the ranges of those bars has got smaller and smaller and smaller, and I bought slightly under £4 within the last couple of weeks. So I'm very happy with that indeed. I think it's just a matter of time. Morgan Sindall, again, significantly undervalued. One of the few building stocks that's in fact left the February 2020 high well in its wake. The big names in the building sector haven't got anywhere near the February 2020 high. The Persimmonses and the Bellways and the Barretts of this world. But this share has outperformed it, significantly undervalued, growing earnings strongly. And the last little push up over the last 2 or 3 weeks occurred in rising volume. It's now going sideways on virtually no volume, telling me there's no sellers around. So a high probability opportunity, in my humble opinion, both fundamentally and technically. Now, Airtel, well, there's been noise over the last few weeks. There was a placement which caused the share to fall. That's that big volume spike that you can see. Plus, there was news that unsettled the market last week out of Nigeria. This company, the largest supplier of mobile phone communications in French-speaking and West Africa. So significantly undervalued by VectorVest, growing earnings very strongly indeed. Just been admitted to the FTSE 100. Don't particularly like the price action over the last couple of weeks, but it is trending upwards, and I'm holding on to it. McFarlane, a 100-year-old company. Again, I don't think it's going to shoot the lights out. It's growing earnings strongly. It's growing earnings safely. And without a doubt, over the last 2 months, it seems to be accumulated where that previous resistance turned into support. And if you look carefully at the chart, you can see that the upswings on the weekly chart that I'm showing here are accompanied by big rises in volume. That's a very good sign indeed. And I think the probabilities bode well for that to, in fact, move up strongly. This is a small miner based in Spain. So I'm very bullish on copper, and in fact, on all commodities. Certainly, they won't go up and down in a straight line. They have a temper on them. But Italia Mining, again, that big volume spike that you can see a couple of weeks ago occurred via a deal, a placing. And it corrected back into the range very quickly indeed. So it's at support, growing earnings strongly, undervalued, and I think that that's a high probability trade in a copper miner in a politically very stable part of the world, which is rare. Again, it's subject to the ups and downs of the commodity cycle, so not for everyone, but I'm certainly on board. And this is Anglo. Now, Anglo I bought into some weeks back. I've spoken about it a couple of times on Core Finance before. It seems to have broken out of that big weekly cup and handle pattern, and cheap on a low PE on the VectorVest valuation, which is, in our opinion, much better than PE relative value. It's got a high earnings potential over the next couple of years. So as you can see, rising strongly and rising on really good volume, and I'm holding a position in that for the last 3 or 4 weeks. I expect that to go much higher. I think the major risks, of course, are from the overall market itself. So if you have a look at VectorVest every single day, it will tell you exactly the position of the overall market. Cold, hard facts, not Elliott waves or things that have been counted, which are totally and utterly subjective. Cold, hard, subjective numbers. If you would like a trial of VectorVest, then please go to VectorVest.co.uk and you can actually take a 30-day trial for about £5. And we'll also be at the IX show in central London in Holborn in a couple of weeks. Thanks very much.